What is going on, investors? Hopefully, guys are doing well out there. That is right. It's time to keep earnings season moving right along when we take a look at Enphase Energy on today's show, ticker symbol ENPH. Over the last year, stocks down about 3%, year to date down 9%, but that probably doesn't include today's pop of about 8%. I am recording this during the regular trade, so this stock has bounced around quite a bit today, but we'll talk about this also from a technical perspective. This one's actually setting up quite nicely. We'll get into the earnings and we'll see why this company is actually doing some really nice things, and we can see why. Look, even year to date, the stock's basically flat if you include today's gain, and there's a reason for it. When we go through these financials, I think you'll see why. Speaking of the financials, the Q1 came in. We had revenues coming in at $441 million. That was just 46.2% revenue growth. I say that's absolutely fantastic growth. And so that's probably the first point I would make with Enphase Energy. When you have stocks like this that are just growing at that rapid pace, okay, you have to assume that that revenue growth rate is at least going to be baked in for a little while, or at least the company has projected out far enough to where investors are a little bit comfortable with that. And then when we look at Enphase Energy, that's kind of what we're seeing, quite frankly, for the upcoming quarter. They're expected to do 51% revenue growth. The quarter after that, Q3, they're expected to do another 50% jump on their revenue growth. Now, it's going to start to flatten out as we get to the tail end of this year and then into 2023, but I think investors are pretty comfortable with that because there's a kind of law of big numbers that once you have this strong revenue growth quarter over quarter, year over year, eventually it starts to flatten out. And when I say flatten out, it's going to flatten out to kind of the mid 30s, at least according to analysts. So that's fantastic if you're an investor in Enphase Energy. This is one of the reasons why you probably have a pretty high multiple on this stock. And also when we look at it from just a price perspective, the price has stayed kind of in a pretty tight range with Enphase, and it hasn't fallen off the cliff like we've seen with a Netflix or a Facebook or a PayPal or an Alibaba stock. This stock has held up, and I think primarily due to the fact that you've got this massive growth rate, and they're able to execute on that. For the Q2, they're expecting revenues to come in at 490 to 520. Consensus was 478 on this one, so I actually thought that was impressive. That we see here, the 478 revenue estimate, that was 51% growth. Now the company is guiding between 490 and 520. And if you think they're sandbagging on the high end, this company could go to 530, maybe even 540. That's way over estimates. That's way over 51% growth. That's one of the reasons, I think the primary reason why this stock is, at least at the current time, up 8% just today alone. And certainly over the last couple of months, this stock back in January is at 116. Now it's at 167. You're getting just fantastic growth rates over at Enphase. And that is fantastic in one sense, but just keep in mind as an investor, and I'm not saying I'm predicting this to any certain degree, but if these growth rates slow, if these growth rates start to get missed, well, that's obviously your downside with a stock like this. But we're seeing in this upcoming quarter, not only are they having fantastic revenue growth, but they're beating their own consensus by a large amount of money. This company is doing a very nice job. Now, let's jump into the financials here. We have that $441 million, which we talked about, was 46% revenue growth year over year on a quarterly basis. You're at 301. You went all the way to 441 last quarter. So what I like about Enphase is they're kind of giving you a quarter over quarter view. That's the middle column. That's back in December. You were at 412, and so you went up to this 441. So not only year over year you're getting explosive growth, but also quarter over quarter as well. The other thing that's maintaining over at Enphase are kind of these gross margins. They're coming in at kind of 40%. The upcoming quarter, they're projecting them to slide just a little bit down, a range from 37 to 40%, but they're kind of in that 40% range on their margins. So as we increase this revenue, our gross profit is increasing right with it. So a $441 million worth of revenue, you had about $177 million worth of gross profit. Last year on a quarterly basis, you were at 122. Last quarter, so quarter over quarter, you were sitting at 163. Now, What is scaling up not quite as nicely are these operating expenses, but again, this is kind of a fresh company. They're also using a lot of stock-based compensation like a lot of these companies do. We'll see that evidence when we get over to cash flows, but you noticed year over year, you went from 61 in operating expenses, that's 61 million, all the way up to this 115. So you bolted on, what is that, over $50 million worth of operating expenses? But again, on that net revenue side, you grew that by over $140 million, and your gross profit grew by over $50 million. So the fact that you grew your operating expenses by about the same amount as your gross profits, again, led to income from operations essentially being flat year over year. So despite the pretty explosive revenue growth, your income from operations basically stayed the same a year over year period, from 61.4 million up to about 61.8 million, although that is up from a quarter ago when you were sitting at about 57 million. I tell you what, this is probably what's keeping the stock a little bit cheaper than it even is, although the valuation is relatively rich with this one, although it's not out of control. But this is the fact that they're not really growing this income from operations line is keeping a lid on the stock to a certain degree, and we'll see how that as this company matures, if they're able to kind of rein in those expenses, run the company even more efficiently. Well, I tell you what, that's a lot of upside as well left in this stock. Now, from a balance sheet perspective, everything looks pretty good. From a cash perspective, about where we were. I did notice this company has a fair amount of inventory, going from 74 million up to 96, and this is not a bad thing, okay? When you're coming way over your consensus estimates on your revenue, I would actually expect you to have a lot more inventory sitting on the books than you did in December. I actually think this is a positive sign. The fact that they not only have explosive demand for their products quarter over quarter and year over year, but it appears they have more inventory in place to be able to meet that demand. I actually like that. They have a fair amount of debt on the balance sheet as well, but plenty of cash to kind of service that. There's nothing I'd be really too concerned about when it came to the balance sheet. When we move down to cash flows, paints a very similar story, okay? So the last 3 months, we pulled down net income of $51 million in the most recent quarter. Last year, we were closer to $31 million. They have all this stock-based compensation and different types of things. Look at this stock-based compensation in the quarter. Saw $51 million worth of net income. They had nearly $48 million worth of stock-based compensation. Paints a very, very similar story in the previous quarter, where you had $52 million in net income and you had $37 million worth of stock-based compensation. This company is really, really accelerating a lot of that stock-based compensation. And again, not necessarily a bad thing. It is a non-cash charge. That's why when you look at cash flows off of $51 million worth of net income, you had $102 million worth of positive cash flow. Same thing for the period quarter ago. You had $52 million worth of net income and you had $97 million worth of positive net income, positive cash flows. That is where this stock kind of separates itself, but you do have to factor in that the vast majority of that is baked into stock-based compensation. And when this company starts to rein back in the stock options a little bit, or the ones start to vest that are worth a lot of money, well, this company still has to compensate its employees one way or another. And so we'll see how, again, it's a challenge that almost every company this size and this scope has to deal with. And we'll see how Enphase kind of deals with it as the time comes. Now, in terms of the most recent quarter, they didn't really do any financing or anything else. So it looks really strong from a cash flow perspective, okay? They had just $12 million worth of purchase of property, plant, and equipment. So this $100 million worth of cash flows really, really flowed nicely into this company. So there's a lot of things to like about Enphase. And I think the risk, look, I really actually like the stock. It's not a stock that I own, but I like their product. I use their product on my house. And I think the financials are really, really strong. I think just if you're bullish this name, just understand a little bit of your risk. This growth rate starts to slow down a little bit, and that can be a huge challenge for this stock. The other thing to understand is they're not printing a ton of money to this operating side, and their cash flows look really good because a lot of these costs here are stock-based compensation. When this company starts to rein that back in, what does it do to these financials? And we'll couple that when they start to rein in the stock-based compensation, the growth rate is projected to start to kind of shrivel up, or go down is probably a much better term from that, because when you go from 50% growth down to about 30, that's still phenomenal growth rate. Just some things to think about. I'm not trying to downplay this stock. I'm not trying to talk it down or convince anybody to sell their shares or not invest in this company. Just want you to let you know kind of the risks that are involved. Now, in terms of the stock performance, it's actually been extraordinarily predictable. Going back to November of last year, the stock's traded in a very tight range to down to about $114 per share, up to close to $200. You're in a tight range. You're like in an $80 price range with this stock. Now, in the shorter term, that's kind of the intermediate term from November to date. That's kind of the intermediate term. I want to zoom in a little bit tighter on the more recent action that we've had over at Enphase, and we're actually making a very, very nice upper trend line right now with this company. So this thing is starting to trend upward, and what is an upper trend line? It's making a series of higher lows and at the same time making a series of higher highs. So we're channeling up nicely with this stock. We're seeing we're sitting kind of still towards the bottom end of this channel. So if you think this stock has upper momentum, well, I tell you what, you got the area of resistance that we talked about here at $200 per share. You'd actually really like to see this stock push up higher than that and get above these highs here at about 220. Now, when we get up above those and we get to kind of the top of this trend line, this is an area where you could potentially take profits if this is a stock that you have a lot of profits in. And I'm not encouraging you to do this, but if this is something that you want to do, this would be an area where I could absolutely see that. And if these lower ends of this trend line continue to hold, well, the stock would probably bounce off this 220 area and come back. There's areas of support at 200. If it breaks through that, there's still areas of support down here, really where the stock is trading today at about $167 per share. So in the intermediate term, I actually like this technical setup. The bull case is getting above about $200 per share. The bear case is really kind of breaking below the previous sets of lows down here at 150. Do keep in mind, though, you have a pretty firm area of support, though, back down here at about 115. The stock is bounced off there, and when it bounces, I'm talking like it bounces like a basketball. It bounces hard off of that 115 level. So yeah, I think you've got a little bit of margin for safety. If you want to be ultra safe with this one, I would set a stop. If I were to get into this stock, I would set a stop loss somewhere down here at about 115, and I would see if the momentum continues to roll with this stock. With these earnings estimates being as strong as they are, and the fact the upcoming quarter, the company is coming way over those earning estimates. We talked about how earnings estimates were 478, and they're projecting to do 490 to 520, and companies are often a little conservative on that. Okay, in the most recent quarter, they actually beat their own estimates by about $7.6 million. This is an extremely impressive company from a revenue growth perspective. I would like to see them run the business a little bit more efficiently, but just based on talent acquisition and the executive compensation, well, I understand it. It's not something that is a complete red flag, but if you clean that up a little bit and really control these costs, well, this would be a profit-making machine with the type of gross margins that this company has. I like Enphase Energy. If you're looking for, I hate to call a $20 billion company kind of a smaller cap, but maybe kind of a mid-cap name, this is an interesting stock. Just, again, understand you actually have pretty big risk on this stock. If these growth rates slow down for any number of reasons, well, all of a sudden the stock would come under massive pressure, because that is what is keeping the momentum in this name and keeping the performance. And I tell you what, if they can keep up this growth rate for the next 18, 24 months, well, I think higher prices are in play for Enphase Energy. Hopefully you guys enjoyed today's video. We got so many to do over the next coming days. I'd hope you consider subscribing to the channel, and we'll see you again soon. Good luck with your investments.